Bitcoin is currently testing crucial support levels after failing to hold above the 20-day moving average. This breakdown suggests further consolidation or even a deeper pullback in the near term. The immediate levels to monitor are the 50-day moving average around $59,800 and the 200-day moving average near $59,400. If these fail, the next major support zone lies between $58,800 and $58,100, based on Fibonacci retracement levels from the recent swing low to swing high. A potential bullish scenario is forming in the shape of an inverse head and shoulders pattern. If Bitcoin stabilizes around current levels and forms a right shoulder, it could signal a major reversal. However, if selling pressure intensifies, we may see a retest of lower support before any meaningful recovery. This is not mere speculation. Historical patterns suggest that Bitcoin often experiences sharp corrections before resuming its upward trajectory. The key takeaway? Volatility is normal, and patience is essential. Altcoins. The calm before the storm. While frustration mounts among altcoin investors due to prolonged underperformance, the data suggests a significant breakout may be imminent. The total altcoin market cap, excluding the top 10 cryptocurrencies, has been consolidating for over 1,200 days since the last all-time highs. This extended compression phase is reminiscent of previous cycles where altcoins eventually exploded in a parabolic rally. Several macro factors support this thesis. Global liquidity conditions are improving, and potential Federal Reserve policy shifts could inject fresh capital into risk assets. Additionally, regulatory clarity, such as the proposed Stablecoin Act and pro-crypto statements from SEC Commissioner Hester Peirce, reinforces the long-term viability of altcoins. The technical setup is equally compelling. Moving averages are tightening, and the altcoin market cap is forming a massive base. When this pattern resolves, the move could be explosive. Ethereum's critical inflection point. Ethereum is at a decisive moment, wrestling with resistance at the 50-week moving average and the lower boundary of a multi-year triangle formation. A clean breakout above $3,400 would confirm a bullish trend reversal, potentially triggering a wave of buying across the altcoin market. Conversely, a breakdown below $3,000 could see Ethereum retest the $2,100 level, where strong historical support lies. The 200-week moving average has acted as a reliable bull market foundation in past cycles, and Ethereum's ability to hold above this level will be critical. Traders should also monitor global M2 money supply trends, as Ethereum has shown a strong correlation with liquidity conditions. If macro liquidity expands, Ethereum could defy short-term bearish sentiment and stage a powerful rebound. Cardano's contrarian opportunity. Cardano's price action has been frustrating for many investors, but the charts reveal a potential setup for a major move. ADA is currently caught between the 20-week and 200-week moving averages, with key support near 65 cents to 58 cents. This zone aligns with a mid-term Fibonacci retracement level, making it a high-probability reversal area. Historically, ADA has experienced sharp rallies after prolonged periods of consolidation. The current coiling of moving averages suggests that volatility is imminent. If Cardano holds above 58 cents, it could mark the final shakeout before a significant uptrend. However, A breakdown below this level might trigger another wave of selling before a sustainable recovery begins. For long-term investors, this could present a rare accumulation opportunity. Strategic takeaways for traders and investors. The crypto market is at a pivotal moment, and the next few weeks could determine the trajectory for the rest of 2024. Bitcoin's ability to hold key support levels will dictate whether altcoins can break free from their prolonged slump. Ethereum's price action will serve as a bellwether for the broader altcoin market, while Cardano's resilience, or lack thereof, will test investor patience. For those considering entry points, the best strategy may be a phased approach, scaling into positions if Bitcoin stabilizes above $58,000 and Ethereum reclaims $3,400. Conversely, if support levels fail, waiting for deeper retracements could provide better risk-reward opportunities. The overarching theme is clear: extreme patience and discipline are required. Market cycles reward those who can withstand short-term turbulence and focus on long-term trends. The current setup, while uncertain, holds the potential for one of the most lucrative altcoin rallies in years. The question is not if but when, and being prepared is half the battle. Would you like additional analysis on specific altcoins or deeper dives into macroeconomic catalysts? Let me know in the comments. I'll address the most pressing questions in the next update.